All right, welcome back to another daily Bitcoin breakdown. It's not really a breakdown though, because Jason is not going to be with us today. Just have me and Chris today. How you doing, Chris?
Good. How are you?
I'm doing fine. Yeah, we're really not going to do a technical breakdown or any sort of trading analysis. Kind of just want to talk about the 80% plunge, right? We're now worse than the dot-com bubble, right? Or is it really worse?
I personally don't think so. I think that it makes sense to kind of reach for the most similar thing that's happened.
Hmm.
And so if you try to compare it to a traditional stock downturn, it doesn't quite work out. So you say, okay, well, what's the closest tech related thing? And it would be the dot-com bubble.
Yeah.
So I think that's kind of it's good to use that as a basis of comparison, but you also have to be very cognizant of the fact that they are not the same. And I think that's
Mm-hmm.
where we kind of run into issues is that people just want it to be the be all end all of it's exactly the same.
Yeah. Yeah. I mean, right off the bat, that's kind of how I feel too. You know, everyone's, I don't even think it's necessarily that negative. I kind of tweeted out earlier that I think from here, there's going to be a complete swap in the narrative, in the sentiment and the narrative, just because of the fact that this was such a big, like, psychological barrier to a lot of investors, not necessarily the guys that are already in, but the guys that have been saying for years now, well, it's just going to be the dot-com bubble all over again, right? And now we're here, right? It went up as high percentage, it went down as much percentage wise. So at this point, I think people are going to feel more comfortable thinking, well, all right, well, since everyone compared it to the dot-com bubble, look what happened after the dot-com bubble crash, right? We saw, I mean, you can't even argue that it wasn't like the dot-com bubble, because, the internet bubble did burst, causing a lot of, worthless stocks to, lose pretty much most of their value. And even though they did lose all their value in the short term, the top companies, I mean, they absolutely killed it in the long run. So the way I see it is that people are going to feel more comfortable, at least the more traditional guys that saw the dot-com bubble, and that's what they were waiting for, the crash. And now they feel more comfortable purchasing this close to the bottom, now that their whole narrative was finally met. It's,
For sure. And that's the thing. I'm not saying that there aren't similarities between the two. I would say there are plenty of cryptocurrency projects out there that are never going to come to light.
mm-hmm,
And, you know, eventually you're going to have to kind of pony up and produce results. You can't
mm-hmm,
just cruise by on ICO money forever if you don't have a viable product that is going to work in the marketplace for whatever reason. A good example would be there's maybe two or three projects that are trying to get into the medical information space
mm-hmm,
and move all the medical information to the blockchain. In theory, it's great. You want to have all this information be secured and easily accessible and not hackable. That's great. But these projects don't realize the amount of regulation that goes around that, and that in the current legal situation, you can't do it.
mm-hmm,
And so you have these projects that are over promising and either will under deliver or just not deliver at all, very similar to the dot-com bubble. You had tons of projects, tons of websites out there that were utter garbage that raised a bunch of money, went public, and then they showed nothing.
mm-hmm,
And so in that case, it's very similar, but at the same time, it would be as if you were trying to build the internet at the exact same time as building all these website services that you are then publicly trading on the stock market. It's like if you're trying to do all those at once, that's kind of what cryptocurrency is. So, and I know someone yesterday mentioned, how would you value something like TCP/IP protocol?
mm-hmm.
That's not a thing. There's no stock value tied to that, but you have Ethereum tokens, you have EOS, you have all these platforms which essentially are working as a protocol layer that have valuation to them. So it's different in that sense. But like you said, after the dot-com bubble, the internet didn't die. Mm-hmm. Just like this, just because you have a huge downturn in cryptocurrency and altcoins in particular, doesn't mean they're going away. It doesn't mean no one's ever going to try to make something big in the blockchain space. So that's the way that I look at it.
Yeah, no, I can agree with that. I think it's also pretty important to realize that overall, there was about $5 trillion lost between 2000 and 2002 and that crash, right? I mean, that's 5 times the size of Bitcoin. The dot-com crash, stocks dropped what I think it was like 78%. They lost 5 trillion in value. Crypto plunged like 80%, and they only lost 650 billion. So there's a little bit difference of scale as well that I don't think people really realize. Sure, the percentages match, but the amount of value, it's just not even there yet. It's comparable percentage wise, but then again, how is that really comparable when you see the numbers like that?
Yeah, and you also have to take into consideration that the dot-com bubble and kind of just this boom in website development and projects was very much a public thing. Yes, people know what Bitcoin is, but the amount of people that are actually investing in it, both on the personal side, but also on the institutional side, you're comparing apples to oranges between the two. There was way more money in the system when it came to the dot-com bubble and when it burst, which is, like you said, an order of magnitude in difference. And so in that case, it's like, yeah, the percentages do match up and it looks really bad on paper, but in terms of actual value that has been lost, it doesn't compare. And so in that case, yeah, a bunch of people lost money, but it's not going to have rippling effects on economies or anything like that at the moment. And this isn't even that drastic of a downturn compared to what we've seen in the past in cryptocurrency. It's just we're getting to that turning point of it being more in the limelight. More people are aware of what blockchain is, mostly Bitcoin and the term cryptocurrency, but they don't know the bigger picture or what the future looks like. And so in that case, yeah, it's going to look worse as time goes on because more people are going to be following it. But this is almost nothing compared to kind of what we've seen in the past, particularly on Bitcoin. I mean, we're only at 60% down, which does sound bad, but if you compare it to 90 to 95% down, which we've seen before, it's a drop in the bucket. So I wouldn't get too hung up on it.
And I don't know, there was a lot of people, and I think it's safe to say that the narrative is that, something like this was bound to happen at this point, right? We saw Bitcoin rise from, a grand breaking out $2 to $3 grand to 20, right? In a matter of weeks or about a month. But I don't think it was necessarily time for that crash yet. Like, I don't think it had to crash, right? With capitalism, you're going to get that speculation that rises above adoption, above the actual value of it. And, you get the correction back down. And I don't think we should have had that correction just yet. I think it's due for other reasons. Specifically, I don't think the next real big crash is going to happen until we hit about 5 to 10 trillion level, because it is obviously a lot bigger than the dot-com bubble. Just because of the open, decentralized, censorship resistant, borderless, whole nature to it, where .com is simply, mostly United States investments. But so I think we got pretty high, and I think it was just so incredibly hard for new money to keep entering the space. We saw so many absolute roadblocks for people to get crypto. I had probably half a dozen, friends, family asking about Bitcoin, cryptocurrencies. And what do you do when these people want in, right? They have to open an account on an exchange. That takes time, a lot of effort, IDs, passes. Some exchanges even had to make you do like a webcam, like video thing, right? That's obviously above a lot of people's, what they want to do to get access. And those people that went through that roadblock were then hit with another roadblock with how much money can you even transfer right? A card you can only buy. It's like Coinbase. For new accounts, you can only buy $500 a week, I think, of
Yeah.
Bitcoin. I mean,
Unless you're
500
doing a
bucks.
direct transfer.
That's yeah. I mean, those are limits. Those are speed bumps on the road where we weren't even able to hit that full speed up to 5 trillion. We weren't even able to hit that. People had so many limitations for those that even knew what Bitcoin was.
Yeah. Well,
And
people are kind of putting what's the term? It's like the horse before the race.
Mhm.
Like, great. It would be fantastic if it was a seamless adoption and you say, oh, I want to buy Bitcoin. You just click a button on your phone, you have Bitcoin and you're done, or whatever cryptocurrency. Sure, that would be ideal. And maybe in the future, that'll be the case, in which that would make it a lot faster to have that amount of value get transferred.
Mhm.
But without that, it's kind of it's the over promising and under delivering problem again, where it's like,
Yeah.
oh, this is going to change the world. Here are the 20 steps to get involved. People
Mhm.
don't want that no one is going to do that unless they're really genuinely interested in it, or they're just trying to make a quick buck.
Yeah. Yeah. I think that's, obviously, I mean, I value Bitcoin. Everyone values Bitcoin so highly. And I think everyone sees this point of it's a lot more than 20,000 per Bitcoin. That's just the point where just I think the buying pressure just got exhausted. There were only so many people able to buy so much Bitcoin at one time. And we saw that where there were so many little hurdles, so many speed bumps in the road that we just weren't able to hit full speed. It was just too many. And it just got exhausted to the point where people saw that top, saw the exhaustion, and took advantage of it. And I think that's something that's different than it's going to be different next time around. When we start seeing a bottom settle in like we've seen right now with, Ethereum's dropping, but Ethereum's kind of decoupling finally. Everyone wanted that, but not in that manner, I guess. But, we're starting to see a bottom here. And when you get that turn up, we're not going to have those barriers for a lot of people. Coinbase brought on 11 million users in that last run up.
Yeah. And
And
they've expanded massively too.
yeah.
It's kind of, this whole downturn has been a period of, okay, let's build out some infrastructure to support this based off of everything that went wrong in 2017. And even on the institutional side, you have a lot of interest in, okay, how do we get into this space? How do we do it correctly? And that's also an issue that people run into is if there's a roadblock, people instantly associate it with it's dead. It's not. Okay, we have started moving into this space and we realized we need to back up and take care of XYZ before we can even get to a point of actually coming into the space. And that's fine. That's what you want. If you don't do that, you get people coming into the space that 6 months down the road, they're facing all sorts of legal complications. And they have the SEC breathing down their back because they didn't take care of this stuff beforehand. They just wanted to jump in. And I think institutions are definitely going to be covering their bases. They're not just gonna hop in just because it's hot right now. And they're taking this as the opportunity to really get things in place for when we do see an actual big push in adoption, where we do get to those kind of .com valuation levels. And even beyond that, like you said, the .com was pretty specific to the US. Yes, it lost money in other countries and other markets around the world. There were definitely rippling effects out of that, but this is a very worldwide thing. Everyone is involved. It'll just kind of explode, I think, a lot faster than people realize. But the infrastructure does have to be there, whether it's things like just expanding existing exchanges, having new exchanges come out, getting things like Lightning Network, fixing scalability issues with existing platforms like Ethereum. There's a whole lot that still needs to be done, and it's just kind of a waiting game, but it's not going to go away.
Yeah. I agree. I don't even think it's going to take institutions to get us back to those all-time highs or hit that $1 trillion market cap for Bitcoin. in crypto. I mean, I don't think I think we could do that on retail interest alone, just judging by how much of an interest there was, all that way up to that 20,000. We got there so quickly and so easily with these roadblocks. And I think those were the only things holding us back, to be honest. I don't think we need institutional money to hit an all-time high again. It's just now that we break that, we hit that bottom, we hit this absolute low of, deeper than the .com bust. And I think that's a signal for the bottom for a lot of people. It might not be the actual bottom, but it's a bottom signal for anyone that ever was holding off because of a crash. They saw this, it's going to end up just like the .com. Here, like we told you so. Now it's time to get back in or get in for the first time. And now we hit that bottom, break a psychological level of, I don't know, what do we probably have to hit 10 again. And from there, those 11 million people that haven't touched their exchange app, their Coinbase app in, 6 months are going to click that app, see they don't have a $500 limit anymore. Well, shoot, I can put in 10 grand. All right. And I think it's just going to take off again after that, because they're going to dust this off. It's going to be there. The speed bumps are going to be leveled out, removed completely. And we're going to see a much bigger jump than 20, just because of those, the new money's able to pour in as much as they want, instead of being limited, not by education or awareness, but by actual physical barriers of limitation.
Yeah, no, I mean, and it's the same thing that you always see in all of these very focused collapses in markets. So, after the .com bubble, the people that were on the fence about buying into it, if you bought in 2002, 2003 areas, you probably made out extremely well. If you invested in the right companies, of course, there were still plenty that were garbage and disappeared after the fact. But if you had invested in something like Google back in that era, you're going to do great. 2008, if you started picking up all of the real estate that everyone was having to liquidate because of the real estate bubble, great. You're going to make out fantastic. And it's the same thing here. The people that are keeping the bigger picture in mind are super eager, and I know we talk about this all the time is, we're going to be huge buyers at these levels. Like, we're just waiting for kind of a confirmation that this is the bottom, and then we're jumping in full steam ahead, buy up as much stuff as we can, because we'll just ride it all the way back up. And that's us being very intimately aware of the situation and being very into cryptocurrency. There are plenty of people out there that are not in cryptocurrency right now, but can identify those same sort of patterns and want to get involved. I'm constantly talking to people, either family or friends or work colleagues, that are like, oh, I know you do that cryptocurrency stuff. Is this a good time to buy in since it's so far down? So there's definitely interest, and it's not existing interest. That's the thing. It's new people coming into the space, not even the ones that are already there.
Yeah, I agree. Yeah, I mean, that's pretty much my thought on it. A bunch of speed bumps. Now we're going to go full speed. I don't think we need institutional investors. I think it's going to help, but people are kind of they're waiting on it for no reason. But I mean, that's about it. I think we just both wanted to cover, our ideas on this. I saw the headline, kind of got excited about it, just from the point that a lot of people care about it. So I don't really care about it, but a lot of people do, especially the guys that just criticize it. And from there, Jason wasn't able to hop on, so we're just going to keep it short, no technical. Just give us a follow. We'll be back on tomorrow, hopefully with Jason, grab a few charts. I don't think the market's really doing too much. Ethereum hit, I think, 170. It's kind of what we expected. Just a little bit more. My shorts are still lining up. Other than that, I don't really have too much else to add. What about you, Chris? Yeah.
It's just that waiting game. Just have to hold on and wait for the bottom and confirmation on it, because that's the other thing. It's very easy to say, oh, it looks like we're bouncing here, jump in, and then just get crushed because we're just having a dead cat bounce and we're not actually there. You got to wait for that confirmation.
Yeah, no, for sure. All right. Well, give us a follow, guys. We'll be on tomorrow, 11 o'clock. Hopefully, a little bit longer than this 20-minute one. But until then, guys.